Good morning and welcome to Stock Market Today. It is Monday, December 9th, 2019, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where a lot of the content for this show comes from, as well as giving you daily stock ideas to consider. Hits your inbox every trading day before the market opened. So U.S. equities were higher in Friday's trading on the back of a better than expected non-farm payrolls report for November. Additionally, China suggested that they would waive tariffs on some of their U.S. agricultural imports. Energy, financials, and industrials outperformed. Defensive sectors lagged. Treasuries were weaker. The dollar gained against the euro and sterling, but was weaker versus the yen. Gold finished down 1.2% on the day. WTI crude was up 1.3%, ending with a 7% plus gain for the week. As we get to the desk and record this show this morning, S&P futures are down 10 basis points in quiet pre-market trading. Asian markets were mostly higher overnight, though the upside was limited. European equities are mostly lower to start the week. Treasuries are stronger across the curve. The dollar is weaker versus both the yen and the euro. Gold is up 20 basis points, and WTI crude is down 1% after that 7+% rally last week. As we look at the structure of the S&P 500, the jobs report drove a Friday rally, which we can see here on the chart, a gap higher that held throughout the day. Now, near-term support remains in that 30.30 to 30.50 area, and then below that at 3,000. We've had this range well outlined for quite some time. In the near term, resistance is up near the highs. We kind of got close on Friday. 31.50 were those highs from before the Thanksgiving holiday. We tried them. We tried to come close on Friday, did not quite break through. However, we do think that the break from this range here continues to target 3,200 to the upside for the index. And that's bolstered by the fact that the RSI is holding bullish ranges. Remember, on that 3-day pullback after the Thanksgiving holiday, we were watching the RSI. It did hold above 50 and is now moving higher once again with price. All the while, Chaikin money flow remaining bullish, solidly bullish, actually getting up here near some of the highs over the past year. So the indicators are in line with the price action from a trend perspective. We've have support clearly outlined, resistance at the highs from before Thanksgiving. I think we continue to stay the course. Now, we could see some choppy activity here as investors turn their focus to the December 15th deadline for tariffs on Chinese imports. However, we continue to feel that pullbacks that hold above support are opportunities to add bullish and very bullish stocks in leading areas of the market to the portfolio to be positioned for a rally into the end of the year. Let's turn to our market in a minute now. What are we writing about in our note today to Chaikin Analytics clients? Well, stocks stage a strong rally after that November jobs report. We looked at that. Small caps, the IWM holds that key 160 breakout level on the week. Remember, we tried to push back below it earlier in the week, but we regained it around the midweek mark and closed the week above the key 160 mark. The Qs remain bullish or very bullish from a ETF power gauge rating perspective with intensely positive Chaikin money flow. The 10-year yield moves higher from the 50-day moving average, and futures do point, as I said, to a slightly lower open here today. Turning our attention now to the power bars for the major indices. The Dow added 1.2% on Friday to take the power bar further into bullish territory, 7-4 bulls to bears. S&P 500 adds nearly 90 basis points, 121 bulls to 86 bears for that metric. NASDAQ up a little over 1%, 29.17 bulls to bears. That outperformance on the part of small caps on Friday up 1.17%, 732 bulls to 263 bears there. Bonds downtick, sending yields higher. Energy, the big outperformer on the day, up 1.9% as crude rallied 1.3%. However, when we look at the power bars for energy, still skewed in favor of the bears. 3 bullish or very bullish stocks there for 13 bearish or very bearish stocks within the XLE, the ETF that tracks the energy sector. So according to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. The major markets are bullish across the board. And that's really the first time we've been able to say that in quite some time. Let's take a look at our stock of the day now. Stock of the day is East West Bancorp. ticker symbol EWBC, auto-generated based on that very bullish Chaikin power gauge rating. And that power gauge rating is very bullish due to very attractive financial metrics, very strong earnings performance, very positive expert activity, as well as strong price and volume activity. So we take the 20 factors, 5 in each of these 4 categories, to come out with this very bullish rating. We have a strong trend above the rising long-term trend line. It is starting to move higher. And in a strong industry group, we've heard us talk about the banks. The banks have been strong. East West Bank closed at 46.57 on Friday, up over 2%. What we're watching for now, however, is that personality change, because the stock remains an underperformer relative to the SPY. What I will point out is that the intensity of underperformance has been diminishing since these lows in the August-September timeframe, but still an underperformer. So we have a very bullish stock that's still lagging, though lagging at a less intense pace. So we're watching for it to begin to outperform. That would signal a personality change. Currently, the overbought, oversold indicator is in the middle of the range. Chaikin money flow has been oscillating between bullish and bearish, so not a clear persistency there just yet. What I see is a stock that was in a downtrend's gone into a consolidation, maybe setting up for a move higher with the banks. However, we're not quite there yet. I want to add East West Bank Corp to a bullish watch list and continue to watch that relative strength closely. If it starts to outperform and we get an oversold reading, all else being equal, then East West Bank becomes a lot more compelling as a potential idea. Let's turn to our sector tracker now. The movement of the major sectors over the last 5 days. Well, that strong performance in crude oil last week has helped push energy to the top of the list over the past 5 days, and we really have not been able to say that all that much over the past few months. Staples, healthcare, and financials all higher over the past week of trading. Comms, utilities, materials, and REITs are kind of middle of the road. Tech has been an underperformer of late, as have discretionaries, industrials, trying to rebound from that early week sell-off due to tariff concerns, but not quite there yet. We really want to key in on tech. It remains one of our favorite areas of the market. It looks like this is a bit of a counter trend move when tech is likely to continue to the upside, and that would be bullish for the market, as it is over 20% of the S&P 500. Let's turn now to our industry in focus. Our industry in focus is healthcare services. Now, we've been talking a lot about healthcare and drilling down on the underlying industry groups. And one of the areas that's been starting to come on is healthcare services. Over the past 6 months, it's outperformed the S&P 500 by nearly 4%. And the power bar ratio, which measures future potential, is very strong. 21 bullish or very bullish stocks in this group for only 4 bearish or very bearish stocks. It is currently ranked number 4 of the 21 subsectors that we track, and it has moved up 1 slot over the past week of trading. Now, we've been highlighting some ideas within this group. Mark Chaikin has been highlighting some ideas within this group. Some of the names that you may want to consider, all with very bullish Chaikin power gauge ratings: WellCare Health, WCG, Humana, HUM, and Select Medical, SEM, as I said, all with very bullish power gauge ratings. So those are 3 of the 21 stocks that could potentially be compelling ideas if they set up properly. Let's take a look at the XHS now, the ETF that tracks healthcare services. We can see it does have a very bullish Chaikin power gauge ETF rating, and the trend is strong. The fund is trading above this rising long-term trend line. And this is a great example of a personality change at the ETF level. We go from being, a neutral or bearish fund to a very bullish rating. Shortly thereafter, the fund begins to outperform the market. The fund is currently oversold, with the indicator rounding higher in an oversold condition, with some solidly bullish Chaikin money flow. Clear breakout through resistance at the $72 level. I think XHS is an area of the market where you want to be focused for bullish ideas. This is the process, right? We've identified the market, we've identified a leading sector, healthcare, and now this is a leading industry group within that sector. We want to start to drill down on these 21 bullish and very bullish names. Let's take a look at what's trending now. Yesterday's S&P 500 movers and shakers, or Friday's rather. Ulta higher on earnings and margins, up by 11% after their big blow up the previous quarter. APA has been a volatile stock, down over 10% on the week, but it did get a snapback rally on Friday, 7.5%. Alexion comments on a hedge fund that took a stake, sent that stock higher 6%. HP, Helmerich & Payne is an energy company rallying with the crude oil prices last week. Still a very bearish rating. Devon Energy has agreed to fund some assets. Also, an energy company rallying with the energy complex, up 4.85% on the day. On Friday, BLL, no real news to send that stock lower. DR Horton was initiated a sell at Goldman Sachs, took 2.8% out of that stock. NVR, no real news. On Friday, I did notice that it did catch an upgrade from JP Morgan here today. COO earnings sent that stock lower by 1.8% on the day. And then Lennar was down 1.76%, although I will note that Goldman Sachs initiated on Lennar with a buy rating. So some activity in the home builders, in and around sell-side commentary, and then earnings on COO to send that stock lower on the day. Let's take a look at what we're writing about in the note today. The Qs, bullish momentum and money flow. The Invesco QQQ Trust. This has been one of our favorite areas of the market. We've highlighted it numerous times in our notes, as well as here on this show. The Qs broke through key resistance at the 195 level and have just kept going. They pulled back to establish 200 as a near-term support level as well, and have begun to rally, closing at Friday at the $205 level. So we have a zone of support between 195 and 200 above a rising 200-day moving average. We think odds favor a continuation higher because of momentum, number one. Take a look at the RSI. The RSI during the pullback, similar to the S&P 500, did not break below bullish ranges, held above 50 and is now working higher. At the same time, Chaikin money flow, intensely bullish, again, up here near some of the highs that we've seen over the past year of trading, really. Look, money flow trading up here near the highs. So the fund continues to be under accumulation. Momentum continues to confirm the strength that we're seeing in price. We have a clear support zone between 195 and 200 above the rising 200-day moving average. The Qs continues to be an area of the market that we like. If you're an ETF investor, can't argue with being long the Qs. If you're looking for individual names, take a look at some of the holdings within the QQQ fund for potential opportunities when they present themselves, right? Leading stocks in leading areas of the market that become oversold with bullish money flow. That's a good opportunity on the long side of the portfolio. What about the IWM? We've been talking a lot about small caps over the past week and a half because we got excited about this breakout, and then we had to start thinking about the fact that it could potentially have been a false breakout, right? Broke through 160, pulled back briefly, but then quickly rallied. Again, RSI holding in bullish ranges, did not get below 50 on the pullback. The fund remains above a now rising 200-day moving average. So odds favor the IWM continuing to work higher with the broader market. It actually traded at a new 52-week high on Friday before pulling back. And take a look at the relative, right? Our biggest hang up on the IWM was the relative performance, and now that appears to be taking a potential turn in the bullish direction. We had a clear downtrend relative to the SPY. We've broken that downtrend line and are beginning to move higher. So how we like to think about this is, number one, we've been skewing our ideas towards large cap stocks. Right now, we want to start to think about some of the smaller cap stocks that potentially look compelling, that meet the process for inclusion on the long side of the portfolio. But we also want to think about what this says about, number one, risk appetite in the marketplace, if investors are willing to bid up small cap stocks. It also lends another bullish breadth confirmation to the rally that we've seen in equities over the past couple of months. More and more stocks, more and more areas of the market breaking out of consolidation. So continue to watch the small caps, but odds favor a continued move higher for the IWM. And finally, the 10-year yield holds the 50-day moving average. We've been watching the 10-year. I think it's important to note that the small caps really started their rally as this backup in yields began. 10-year yield holds the rising 50-day moving average, still below resistance at 2% and the declining 200-day moving average. But the RSI for the yields appears to be shifting towards bullish ranges, and that could potentially set the stage for further upside on yields. What does that mean in the equity market? Well, continued outperformance on the part of financials, especially the banks, and potentially continued underperformance on the part of our bond proxies, the REITs and the utilities. So we continue to key on the intermarket relationships at play across asset classes, in particular what yields are doing and what the impact on different areas of the equity market could be. That's going to wrap it up for a Monday morning. Head over to ChaikinAnalytics.com. /today, where you can sign up for that free email, daily stock ideas for you to consider in your inbox every trading day before the market opens. Have a great Monday, everyone. I'll be back here tomorrow.